Hey everybody, James Cordes here with the Moore Group, coming at you middle of November. We are just about done with 2024, on to 2025, and a lot going on in the rate market. Let's jump into the news. Obviously, last week we had the presidential election on Tuesday, and then we had the most recent Fed meeting and rate cut on Thursday. Talking about how those affected the market and whatnot, let's talk about the election first. The best case scenario Wednesday morning waking up was that there was a clear and decisive winner. Didn't necessarily matter who won in that respect early on with the market. It was that there was a decisive winner, and that allowed the market to start kind of forecasting out what the economy, what data might look like in 2025. And that's what we saw for the next couple of days. If you followed along, the rate in the bond market actually increased, had a negative effect from the presidential election results. And that's simply because the market is forecasting that the economy might be stronger under President-elect Trump. And if that's the case, obviously during this whole, waiting for rates to come down, we've been waiting for the economy's unemployment to go up and job creations to come down. We've been waiting for the economy to weaken a little bit in order to allow the Fed to cut rates. Well, if the assumption is under the new regime starting in January that the economy might be stronger, well, that doesn't necessarily mean it's going to be better for rates. That's why the rate forecasted out inflation maybe a little bit higher, a little bit longer. We'll see what happens. Obviously, those are just forecasts, but that was the first kind of instinct we saw from the market last week. On Thursday, we saw a 25 bip rate cut. That rate cut came with much less fanfare than the September one, obviously because of the national news a couple days before that. But really, they were already baked into the rates. Rates were already fluctuating quite a bit because of the national news. Friday saw a nice decrease in rates, and then it's kind of balanced out this week. So not a whole lot of movement necessarily, certainly some reactions to everything that's happened, but we're really where we were a couple weeks ago. Rates are about where they were back in July, coming up a little bit from September. This week we got CPI and we got PPI for October. Consumer price index, CPI for October, came in right at expectation. Producer price index, the PPI, came in a little bit hotter. Inflation coming up a little bit for October. Market didn't necessarily like that. All of these are going to be factors that the Fed takes into account for their December meeting, where it is assumed that they will do another 25 basis point cut. However, percentages of no rate cut are up to around 30% depending on where you look. So we'll see what happens. Retail sales reports come out on Friday as well, so we'll see what those numbers tell us. That's going to be it on the monthly market update. I just want to touch base on the election and the Fed rate cut. Pretty much business as usual right now. Markets have slowed down a little bit as holiday season is upon us. I hope you have a great holiday season yourself. Thanksgiving coming up and then the holidays in December. Reach out if you have any questions. If we don't hear from you, we'll talk to you again in December. Thanks for checking in. We'll talk to you later. Bye.